Good afternoon, everyone, and welcome to Stock Market Today for Tuesday, April 8th. It's Alissa Coram here, and the market's tariff tantrum continued with a lot of volatility today that ultimately resulted in stocks finishing lower on the day as we try to find our footing here with a lot of uncertainty out there. And joining me to break down the market action today and a couple of stocks to watch is my colleague, Ed Carson. Ed, what do you have for us today?
Yeah, I would like to take a look at Primo Brands, Netflix, and TJX.
Okay, we'll take a look at those stocks, but first, let's analyze the major indexes, kicking things off with the NASDAQ Composite, reversing lower on the day, finishing down about 2.2%. Meanwhile, the S&P 500 down 1.6% on the day. Then we had the Dow down about 0.8%. Reversing lower as well. And the Russell 2000 small caps hit the hardest today with the Russell down about 3.4% or so, headed into the final stretch of the day. Maybe a little bit of a close off of that level into the final stretch there. But Ed, we've got volatility, which the IBD team was expecting. Perhaps there was a little bit of excitement this morning, just like there was Monday morning, but we faded throughout the session.
Yeah, what was unusual, this was different from yesterday. There wasn't any real news, after the open. There's always stuff going on. So yeah, strong open, then terrible, pretty bad finish. I guess in this market, 2% drop is not terrible compared to what we've had in other things. Yeah, really ugly. There's just a lot of things. People are hoping for a trade deals, so you can see that the market would really rally if we got trade deals. But you can also see that if that doesn't happen, you can see how the market can come off there. We're going to see massive tariff hikes overnight, especially on China, but basically on everyone. So that's going to be, we're really going to start feeling it one way or the other. Now, some people say like there's going to be long-term upside, but there's going to definitely be pain in the U.S. economy, global economy, over the next several weeks and months, assuming these things hold in. And again, none of that matters right now. Like, you just look at this. You don't need to do anything. You could be completely in a bubble. The market looks terrible. The market is volatile. There's nothing here. Nothing looks good. Very few stocks are holding on. You just it's just a market to stay out of.
Absolutely. Cash is definitely still the place to be. And what we do know from studying market history is when you do get an increase in volatility, it takes a while for that volatility to subside. You could get some huge swings to the upside, but that doesn't mean that the bottom is in, right? So case in point, the last couple of days, right? So we'll have to see how this continues to digest. As you know, we are still holding the low from Monday, but it wouldn't take much to take out that low either, Ed.
Yeah, technically a rally attempt is still underway. And so technically later this week, if we held Monday's lows, we could have a follow-through day. I think even if we had a really classic looking follow-through day of big, powerful gains, you'd still be a little nervous given the sell-off we've had and given the fact that any headline could send the market way up or way down at any moment.
Yeah.
So there'd be a high failure risk. But yeah, right now
it's just then, go in incrementally.
Go incrementally. So if we have a follow through day and that could come in, you should definitely take note of it. You have to, because you don't know what will happen. It could be a tradable rally. It could be the real thing that goes on for a long time. So you want to participate. But yes, it's just a lot of caution here. And you're right. So
you're exactly right. Because on the flip side, for traders who jump the gun, they could get really chopped up in this period. So be patient. We'll see if we get a potential signal later this week and can dip our toes back in the water. But until then, we'll just watch from the sidelines and get our watch lists together. A couple of names that we'll be going over here today. I did also find it super interesting right where we bumped our heads today on the NASDAQ, the intraday high, the last 2 days virtually the same here, at least for the NASDAQ. Let's check in on the S&P 500. Not quite as exact as what we saw on the NASDAQ, but roughly the last three trading sessions, we stopped and got resistance right around the same place. And today, the S&P 500 closing below that 5,000 level, Ed.
Closing below there, and this, this didn't. I mean, technically, it's a rally attempt because it closed in the upper half of its range. But
On
yeah, it's
Monday.
just on
Yeah.
Monday, and it's just you can see there's going to be resistance at a lot of places, like very short term, and then there would be a lot of levels, and this goes with a lot of all the indexes. There's a lot of places. Something David Ryan was saying is that as you go up, a lot of people are going to want to sell on whether for the indexes or just for stocks. There, just a lot of for the so it's just going to be tricky. This is one reason why it can take weeks or months after a big sell-off like this to come back, because it's just hard to get higher. A lot of people want to get out, understandably,
Yeah.
after taking big losses.
Yeah. And we love our analogies, right, Ed? So like, when you have a clean break of a major bone, right? It takes a while to heal. This is no sprained ankle we're dealing with the market.
Yeah, or to make it more emotional. It's sort of like if you break up with somebody, you might be putting up with that person, and it's like then it breaks, and it's like it's going to take a lot just to bring you back together again. And I think that's the way the market is going to be.
Yeah. Well, we don't want traders out there to feel heartbroken.
No.
But I think those who have been watching this show as well as IBD Live and read our coverage on investors.com, hopefully that's been a guiding light for active investors out there on how to handle this every step of the way versus just now, doing something about the portfolio with all the downside volatility we've been seeing. Okay, quick thoughts on blue chips and small caps, Ed.
Pretty much the same thing. I mean, that's been like Dow, sort of like last couple of days trading that area lows. Russell is almost at lows, and it's that's already at a 1-year low basically this week. So almost undercut. You can just see how much damage that's really been underperforming for the past 4 years. So those just look really terrible. I think the bond market is really strange, and that's a little unsettling. I don't think anybody quite knows what's going on, but when the market, I mean, it was surging up there when the market was going down. It's like you'd think that there'd be safe haven flows, and there had been up until this week. I've heard people, China might be selling, or there might be some weird deleveraging related to Treasury futures. I don't know, but that's not great. There's a lot of, so that's something to watch. It's just a day or two. These things can happen, but if the yields come up, there could be a lot of negative implications from that. So it bears watching.
Yeah. And what I find really interesting about the major stock market indexes right now, Ed, is now that we have seen the velocity of this decline, coming out on the other side will be super interesting to study what ultimately pans out. Are we going to get some sort of V-shaped recovery? Are we going to have a period of a lot of volatility that slowly over time finally contracts? Are we going to have another wave down in this? So it's going to be interesting for all of us chart nerds. This will be interesting to see how this one plays out, because you have that added element of the news risk and all the uncertainty with that.
Yeah, I mean, the possibility of V-shape is still there if you had some kind of resolution very quickly that the markets liked. So it's still possible that could happen, like sort of like the COVID crisis. But yeah, it's just I think you just have to take it. One reason to be on the sidelines mostly is that it helps you have, be more objective and not be wishing things into existence that aren't there.
Yeah. Yep. I'm totally with you. Okay, let's take a look at those stocks, starting with Primo Brands, PRMB. This one's been on our radar for a little while here, as that relative strength has really been a shining moment here, I think, for Primo Brands as this market rout continues. The stock holding right around the 50-day line as it forms a base.
Yeah, this has a lot of water, like sparklets, Poland Springs, some other, water or fruit type things. And this has done really well. The relative strength line, look, I mean, anything that's going anywhere close to up is going to have a rising one. This one has been hitting highs, and the earnings are strong. The guidance looks really good for the next couple of years. I mean, 52%, 26% after a very strong
Earnings growth,
2024. So it's water, but there's real growth there. This is not like some of those defensive names. I mean, this is a growth stock, even if you don't consider it a normal growth field. It's trying to fight around the 50-day line, but that's the thing. Even this stock, it couldn't hold it today. I mean, there's a lot of the names that I was looking at this morning. They were above the 50-day line, holding it or bouncing from it or reversing above it,
Mhm.
and it just couldn't. Again, this is right there. It's fine, but there's so few stocks that are in bases and uptrends. This is sort of vaguely in a base and an uptrend. It's just so few, and even those are struggling to hold their 50-day lines. It's just really, really slim pickings, even compared to like a week ago. A
Mhm.
big shift in how few stocks look anything close to attractive.
Mhm. Well, uh, don't water it down, Ed. Tell us like it is.
I, yeah, it's just there's the earnings are flowing on this one, but the stock. Look, we're watching things. We're watching things. We're watching looking things that are showing relative strength, and this is
Mhm.
definitely one.
It absolutely is. No doubt about it. Because also, it's not like it's just now showing that relative strength. It also had a very solid prior uptrend the last number of months, going back to last summer. So a standout for multiple reasons, not just as, oh, hey, this is a defensive stock that's just now looking okay or looking good. So
Exactly.
we'll keep that in mind. Okay, let's check in on Netflix. When I was screening stocks for growth names that actually finished up on the day, Netflix was one of the few, albeit it was a fractional gain, up just 0.3% and well off highs, like a lot of stocks out there. But it was up on the day. And this one's not holding its 50-day, but it is holding the 200-day, which even that is a challenge for a lot of stocks out there.
Yeah, traditional growth stocks, and this is definitely one. Very few are above their 200-day lines. Very few are even close to their 50-day lines. This is definitely not actionable. It's something to watch. The relative strength line is at a new high, it looks like, or right there. Earnings are next week, so even if this were close to actionable, you'd probably be like, I don't know about that.
Right.
It does seem like a few other names that this seems like a T-Mobile or like a Spotify. Those things. It's like, are you really going to cancel these? Things are going to have to be dire before you give up Netflix. But it's not there. The stock is not there. I mean, so if it gets above the 50-day line, it's got potential double bottom here, but this stock could sell off further even as its RS line holds up.
Yeah.
So we're just looking at stocks that are showing relative strength, and this is one that is.
Right. And lots of good points there, Ed. So if we do, and that's a big if, get a follow through day between now and earnings, that would make it really tricky here.
Yeah.
But we'll have to see how it sets up. And I would say, even if earnings gets an initially positive reaction, I would say, especially in this type of market environment for now, where it's not all systems go, it's not one where you would be aggressively buying at the open or maybe even overnight. It seems like a market where some past earnings seasons you just get a lot of fades, even if there are initially positive responses. So it just seems like an environment where you would want to be more careful, even if an earnings report on the face of it or that initial reaction appears to be positive. So we'll have to keep an eye out for that. And moving on, let's talk about TJX, Ed. Tried to break out of a double bottom base, but hit some resistance. What do you make of the chart?
Yeah, I mean, I think we can still call this double bottom valid, even though you technically went through that 8% level. So, but it bounced and found support over the 200-day line. Tried to get above the 50-day line, but it just couldn't today. I mean, it did rise today, and look at that RS line. Oh my goodness! I mean,
Pretty vertical.
that's pretty vertical. Flat is vertical now. So, I mean, this did not have the most. This one is a little different from Primo. You had made a good point about the prior uptrend, and TJX has a great long-term record. But on a weekly basis, the past few years, not really gone anywhere. The stock has been fine, and the market has had a good run. So it actually has had a decent gain, but you're not outperforming until lately. So I don't want to be knocking on this too much because it's still gone okay. The growth is solid. It's not going to be tremendous. It's taking up. It's sort of like all these and other things. It's taking goods that retailers can't sell, so they're not directly affected by tariffs. So there will be that. We'll see how that all shakes out. They seem a little bit more insulated from those situations. So this is one to watch. I suppose if you got above the double bottom buy point, again, in a better market, you could consider it. This is one that's probably not going to be as volatile as some other names. I mean, some of the names look really exciting. Some names that were up 8%, 9% this morning ended up down.
Yeah.
It's like,
Mhm.
so this is not a market for high average true range. I mean, those are exciting, and maybe if the market turns, you'll be really lucky
Yeah.
and you'll have those. But it seems like lower ATR stocks, not the super low, but a lower one would
Yeah.
probably be a safer bet right now.
Well said. And I'm definitely no day trader. So, this feels like a day trading kind of environment. And that is a skill set. That is a skill set,
It is a skill set. It's not a skill
Uh,
that I enjoy. I don't like even. I'm not really a big fan of swing trading. I mean, I think there's people
yeah.
who really have the mindset, and I don't really care for it. It just, again, trying to get 80% of a rally. If we have a good rally, and if we have a rally, it may end up being a really powerful rally because we've had this sell-off.
Right.
So you might have that. And so you want to be able to take advantage. If you get 80% of that, that might be really good. You don't have to get the very bottom because,
Mhm.
because if you try to catch the bottom, you could end up being down 20%,
Yeah.
and not knowing if that's it. So
Mhm.
be careful.
Yes, totally with you. Feeling happy to be on the sidelines. Don't feel like I need to catch the bottom for quality growth stocks that we're screening every day, talking about on the show, talking about on IBD Live. A lot of them aren't ready yet, and you've experienced more follow through days than I have, but there are times where you get a feel, you get a sense of not only is the market getting in gear, but the type of stocks that we want to be trading are in the right position as well. And we're not seeing that yet. So,
No, this is like, it's the dearth of stocks is really striking. I mean, often second day of a rally, at times, especially if it's a good one, or third day, you're seeing a lot of stakes breaking out. It's like, that's not what's happening
yeah,
there.
not yet. Yep. Okay. More evidence needed, more improvement needed. So we know you and the rest of the IBD team will be keeping us up to date. So we appreciate it, Ed. Thanks so much for weighing in.
Thank you, Ali.
And thanks for tuning in, everyone. That is it from us for today on this show. But we do have our monthly Swing Trader Status Update program coming up live at 5 p.m. Eastern on our YouTube channel. You can catch the recording at investors.com/videos if you're not able to make it live. But that's happening today live at 5 and live at 5 on Wednesday. We have our weekly podcast with Justin Nielsen. Thursday, we have our leaderboard scorecard quarterly webinar for our leaderboard members. And coming up on Saturday, we have our short selling strategies webinar. Head to investors.com for all the details on that. So it's a big week. We're, almost at the halfway point, not quite, and a lot of programming that we look forward to sharing with you all. Lots of great insight from our team from a lot of different perspectives. So definitely make sure to take advantage of all of this week's programming. Thanks again for tuning in, everyone, and we'll see you back here tomorrow.